Hello students, as we have seen in our introduction video of process costing, when some product is manufactured using multiple processes, then generally the flow is process A is first step where the goods are manufactured using one process, and then those goods are transferred to process B. Again, after process B, the goods are transferred to process C, and once they are processed completely, then they are delivered to the market for sales. So this way, the process costing starts with process A. It will start with process A, then the goods will be transferred to process B, and then to process C. So at all these levels, there is addition in the cost of manufacturing. So how this cost of manufacturing increases step by step, that we will see in this process costing chapter. So here you can see basic material is 10,000 units. This material will be introduced in process A only. As it is seen, from A it will be transferred to process B and B to C. So basic material is entered only once in the process. Okay. Then additional cost incurred is material, then second wages and direct expenses, one more is overheads. And after spending this amount for process A, the output of process A will be transferred to process B as it is seen here. And same way in process B, this amount will be spent for manufacturing, and then the output will be transferred to process C. And in process C again, we have to spend this amount, and then the output will be transferred as sales, or we can consider it as finished goods. So this way, we have to prepare the complete process account. Let us see one by one. As it is given in our question, basic material of 10,000 units is introduced in process A. So here you can see the process accounts. Basic material is introduced in process A. 10,000 units at rupees 10. Total amount comes to 1 lakh. Then direct material, which is 1,20,000, is shown again on debit side as expenses. Same way direct wages, direct expenses and overheads. All these are expenses related to process A. They are transferred to debit side. Then there is normal loss. Normal loss here it is mentioned as 5%. So 5% on input. So here input is 10,000 as you can see here. So 10,000 into 5%. So normal loss will be 500 units as you can see here. And scrap value of this normal loss is rupees 2. So here it shown is rupees 2. Total amount recovered from normal loss scrap is rupees 1,000. And after posting all the information related to process A cost, and after deducting normal loss from this process, we will get balancing figure as output, which is transferred to process B here. This output transferred is 9,500 because total input is 10,000, and from 10,000 if we deduct normal loss units, then the output transferred to process B will be 9,500 units. If we take total cost, it comes to 3,60,000, and after deducting rupees 1,000 from this total cost, we'll get total cost of output of process A. It is 3,59,000, and divide by 9,500 equal to 37.79. So 3,59,000 divided by 9,500 units gives us 37.79. So this is cost of process A. Now this output shall be transferred to process B. Now for process B, again, we need to transfer all these expenses on debit side. For process C, all these expenses on debit side. And at the end of process B and process C, the output will be considered as finished stock. That we will see in process B and process C account. Here you can see output is transferred from process A. Here it is mentioned to process A account. Output is transferred rupees 3,59,000. Then all these expenses are shown here as they are mentioned in the question. Here normal loss is 10%. This 9,500 is number of units input and normal loss is 10%. So 9,500 into 10%. So this normal loss shall be 950, which always depends on the quantity input in particular process. So amount comes to 2,850 because scrap value given is rupees 3. And after taking total of quantity column and amount column, we will get total quantity and total amount. And balancing figure transferred to process C comes to 8,550 and amount comes to balancing figure as 6,67,150. In order to calculate this rate per unit, just divide 6,67,150 divided by 8,550. It comes to 78.03. As it is shown transferred to process C, it is 8,550 units at 78.03 and this is the amount. This amount is shown again on debit side of process C account. In process C, you can see this amount is transferred from process B at 78.03 and amount is 667,150. Again, if we post all these expenses on debit side, but there is no normal loss, so complete production of 8,550 units is considered as finished goods because once we complete process A, B and C, the goods will be considered as finished goods which can be offered for sale. So 8,550 units is net output and taking total of debit side amount column, the amount comes to 10,01,150. In order to calculate rate of 1 unit, again same method, 10,01,150 divided by 8,550. You will get 117.09. Now this output can be sold or it can be transferred to finished goods as per the information given in the question. For this question, the output is considered as finished goods because there is no information given regarding the sale of goods. So this way, we have to transfer all the costing related information and we will get output from process A transferred to process B, output of process B transferred to process C, and output of process C can be sold, but here it is considered as finished goods, which is 8,550 and 10,01,150. So once you practice 2 or 3 questions, you will get idea how to transfer output from A to B, B to C, and then to finished goods. Or in next question, we will see the adjustment of goods sold instead of transfer to finished goods. So this was a basic question of process costing. In next question, we will see normal loss as well as goods sold. So thank you.